Hi, my name is John Dowdy, and I'd like to give you a quick review of the stock market for the week ending July 5th, 2013. This is entitled, "The Market is on the Cusp of a Recovery," because last week we went up and cleared resistance, and if we can stay there, then we should be looking for a recovery. If you'd like more data after viewing this video, then please come to my website, www.superchargedretirementincome.com. First, we'll look at the short to intermediate time frame using daily charts, and then we'll take a long-term view using weekly charts. Okay, this shows you the chart of the SPY, which is the ETF for the S&P 500. We've been in this channel since last November until a few weeks ago. We fell out of the channel. It looks like we were going to go and make a major correction. We went down about 5%. But then we started a recovery, and that recovery continued. Last week, the key resistance, as we have been saying, was 162. This is where the 20-day went over the 50-day moving average. Monday and Tuesday, Wednesday of last week, we stayed in a trading range, but on Friday, we succeeded to go over the 50-day moving average and stayed there. We closed there, and so if we can stay there, then we should be on the way to a recovery. Next week, we'll see if we can get follow through. What we'd like to see is that we stay above 162 next week. The next resistance is up around 166. So if we can stay above 162, then I think we're in a recovery mode. So in summary, the bull is making a recovery. The market closed at 163.07 last week, which is above our resistance, 162. The good things are we're back in the channel, and we're also above the 20 and 50-day moving averages, as well as 200-day too, of course. And if we can stay above those moving averages, if we can stay above 162, which is now support, then the recovery will be confirmed. We have to stay there for a few days next week, though. Next resistance is 166. Now, if we look at a long-term view, this looks even more promising. As we've been talking about, the high in 2007 was up at a little over 157. This is now strong support. A few weeks ago, we broke through that support, went up all the way to almost 170, but then had a throwback. This throwback went all the way back down to support, but support held, and this week it's confirmed that it held. Now we're well above support again. So that's very promising in the long-term view. So summary then, the long-term view is definitely bullish. We bounced off support after a throwback, which is definitely positive. As long as we stay above key support, of 157.47, then the bull is strong, and we should be going to potentially even a new high. Legal disclaimer: the contents of this video is strictly for informational purposes and should not be construed as any investment advice or offer to buy or sell. This is my opinion, and you and only you are responsible for your investment decisions. And of course, any investments have a risk of loss, and past performance does not guarantee or even indicate future profits. So good luck next week. Keep a close eye on the market. Let's see if we can hold 162. If we can, then that's very bullish. Thanks for viewing, and as I said, if you'd like more data, please come to my website, www.superchargedretirementincome.com. Thanks.